There's a war happening right now. You can't see it on TV, you can't hear it on the radio, and you'll never find it on a battlefield. Yet, it decides the value of everything you own, from the cash in your pocket to the roof over your head. It's not fought with bullets or soldiers, but with interest rates, policies, and debt. This is the silent war between central banks and real wealth. Centuries ago, money meant something real. Gold, silver, and land were wealth. Tangible, hard-earned, and limited. If you owned gold, you owned power. But bankers discovered something revolutionary. They didn't need to own the gold to control it. They could simply issue paper notes that represented gold. People trusted the promise, and the system grew. For every ounce of real wealth, there were many more promises circulating in its name. This was the birth of fractional reserve banking, lending out what didn't exist, creating money from thin air. At first, it seemed like magic. Trade expanded, empires flourished, and the illusion worked. But beneath it all, something changed forever. Money detached from reality. Wealth stopped being what you produced and became what you could borrow. Debt was no longer a burden, it became the engine of growth. The more people borrowed, the richer the lenders became. Then came the ultimate creation, the central bank. In 1913, under the shadow of secrecy, a small group of bankers and politicians met off the coast of Georgia, on Jekyll Island. From that meeting came the Federal Reserve System, a private institution given public power to create and control America's money supply. They said it was to stabilize the economy, but in truth, it centralized control. The power to print, inflate, and manipulate wealth now rested in the hands of a few. Other nations followed the same path. The Bank of England, the European Central Bank, the Bank of Japan, all became architects of a system that looked stable on the surface but was built entirely on confidence. They created liquidity out of nothing and called it prosperity. Meanwhile, real wealth, gold, land, production, remained limited, while paper promises multiplied endlessly. The balance between real and artificial wealth tilted too far. By the mid-20th century, the illusion had become too large to maintain. In 1944, after World War II, the world gathered at Bretton Woods. They agreed to peg all major currencies to the US dollar, and the dollar, in turn, was backed by gold. For a while, it worked. The system had an anchor. But as the US printed more and more dollars to fund wars and welfare, the gold reserves couldn't keep up. By 1971, the illusion cracked. President Richard Nixon went on television and announced that the US would no longer convert dollars into gold. The gold window was closed. And just like that, the last tie between money and reality was cut. From that day forward, money became entirely abstract. Every dollar was now debt. Every bit of currency in existence had to be borrowed into circulation and paid back with interest. The system could only survive if new debt was constantly created. Governments borrowed, corporations borrowed, families borrowed. It didn't matter who, as long as someone somewhere kept the machine alive. But there was a price. When debt becomes money, inflation becomes inevitable. Each time new currency is created, the value of existing money falls. You don't notice it at first, a few cents here, a few dollars there. But over time, your savings buy less, your work earns less, and your freedom shrinks. The rich own assets that rise with inflation. Everyone else rents their future from a system that keeps devaluing their labor. In 2008, the illusion wavered again. Banks collapsed, markets crashed, and the world came face to face with the monster it had built. Trillions of dollars evaporated overnight, and then, miraculously, trillions more appeared. Central banks stepped in with quantitative easing, printing new money to bail out the system. They called it stimulus. But it wasn't free. It deepened the dependency. Every crisis demanded more money, more debt, more manipulation. While the global economy looked rescued, something darker took root: inequality. The top 1% grew richer than ever, not because they worked harder, but because they owned the assets that central banks propped up. Real estate, stocks, and commodities soared. Meanwhile, the average worker saw wages stagnate and costs rise. This was the invisible tax, inflation. It doesn't appear on your paycheck, but it steals your wealth quietly, relentlessly, year after year. And now, a new phase of this silent war has begun. Central banks are unveiling their next weapon: digital currencies. They call them CBDCs, central bank digital currencies. On the surface, they promise efficiency and security. In reality, they represent total control. Imagine a world where every transaction you make is tracked, where spending limits can be set, and where money can be programmed to expire or be frozen with a single click. Convenience is the bait. Compliance is the cost. We've seen this pattern before. Rome debased its silver until its coins turned worthless. Britain inflated its empire into decline. Now modern nations print, borrow, and inflate their way toward the same fate, believing they can outsmart history. They can't. The tools have changed, but the pattern never does. Every generation believes they've mastered money. Every generation eventually learns they've only been managed by it. The silent war continues, not with violence, but with policy. Not with guns, but with numbers. It's a war where inflation is the battlefield, and your purchasing power is the casualty. But real wealth still exists, though it's harder to see. It's the farmland that feeds. It's the gold that endures. It's the skills, ideas, and businesses that create true value without borrowing it into existence. Real wealth can't be printed. It has to be earned, protected, and understood. The central bank's power rests on one fragile thing: belief. When people stop believing in the system, it begins to crumble. Every fiat currency in history has eventually failed, not because it ran out of paper or ink, but because it ran out of trust. The silent war between central banks and real wealth isn't about economics, it's about control. Control over perception, over behavior, and over time itself. Because as long as you measure your life in their money, you play by their rules. But the moment you begin to understand how the game is played, everything changes. You start to see what's real, and what's manipulation. You realize that wealth isn't the number in your account, it's the value you hold outside of it. The future will belong to those who can tell the difference between money and meaning, between debt and value, between the illusion and the real thing. The silent war is still being fought. The question